we're in the middle of very exciting times, and primarily because the operating environment is undergoing alterations. I see four big themes emerging. One is digital and tech. Secondly, there are new entrants coming in. Thirdly, because of digitization and so many other factors impacting the overall environment, I see customer behaviors changing. And finally, I see more regulatory complexity going forward. Digitization and digital transformation, there are two aspects of it. It's the digital transformation that's happening inside our branches. And secondly, all the exposure that our customers are getting from sources other than the branches. And these are all the digital platforms from within the bank or even outside that they're being exposed to. More and more transactions are being passed on to self-service channels. It's definitely going to enhance productivity, give convenience, improve the speed of transactions. And then, of course, all the exposure from the non-branch digital channels, the mobile app, online banking, fintechs are throwing their offerings at our customers. Now, the outcomes of these two trends, I think, are going to be very significant. One, the omni-channel strategy is going to be so much more relevant. Customers will accept a very seamless and consistent and a very cohesive experience across all channels. Secondly, digital has been winning so many battles for us, and that's the nature of the offering. But I think going forward, we'll have to keep in mind that the personalized touch of humans is something that we will somehow we'll need to build into those digital interactions. The onboarding experience and the transactional experience. As far as the onboarding experience is concerned, I think we have to make it more painless. Retail banking has a wide array of products and services, and we have to ensure that one part talks to the other. I think that's fundamental. Whether it is fewer clicks, whether it is fewer documents, fewer visits to the branch, we've got to make it happen over time. When we talk about the transactional experience, we have to make it more and more frictionless. I think that's the key here. If a process is clunky, if a process is broken, there's no point taking it to digital, because that way you'll just transport a weak process onto your digital channels, and you're going to create a bigger mess. Generally, retail bankers are considered to be people who possess a very, vanilla skill set, if I may say that. Nothing wrong with that. What's very important is that our operating rhythms have to be very strong. We may be doing simpler things compared to investment banking or corporate banking, but it's important that we do those things right, and we repeatedly, they're woven into our operating rhythms. So with the introduction of technology and so many new things around us, open banking, and people are talking about generative AI and open banking, so many of these things, embedded finance. So I think understanding for those offerings or technology has to be much better. I don't expect people to become coders overnight. I mean, that's not our mandate. But I think understanding how those things work for our customers is going to be very important from this point on. Given the scale, I think we need academies, banking academies, first of all. I think that's something that I think about a lot. This is where we need to pool our resources, all of us. There are sacrifices to be done. I think all of us, existing lot of bankers, have to come out and devote time to such initiatives. Somebody's got to fund this. Cards and payments have gone through a lot of evolution. The payment methods have really evolved, and the diversity of the payment methods that's come through in the last 5 years has been much more than what we've seen in the last 20, 30 years collectively. I'm personally very excited about tap and pay tokenization. It's one of the simplest and the most frictionless payment methods that you can have. As you know, e-commerce is exploding, and how we sort of build those customer journeys to make it more and more seamless, I think is going to be key. Pakistan, as you know, is a market where payments mostly happen on the basis of card credentials. Most of the innovation has been around that. QR, for example, it's a new method, exciting new method, and the Rast QR, which the central bank is leading, I think it can be a game changer because of so many methods that are available, so many sort of avenues that are there for cards and payments. I think the cost of conducting these transactions is going to gradually come down. That's definitely a trend that we have to watch out for. Definitely, there's been a lot of traction since the new guidelines came out, I think, in 2021 or so. I think there were primarily three areas, broad areas. One was bank accounts for women. Then secondly, loans to women borrowers. And thirdly, women in the workforce. As far as lending to women is concerned, I think that's an area, it's a difficult area because there are social barriers when a woman wants to step out of the house and go and acquire a loan. It's not looked at very favorably. And I think that's the feedback we've had. We run a lot of sessions throughout the year, not just to train women, but just to give them basic coaching, hand-holding, and sort of taking them through all the formalities that are required. But despite that, I think because of social barriers and the fact that they've not been traditionally part of the economic activity, it takes a while for them to get up to speed on this one. Now, I think the biggest change I think we are seeing in the deposits, in the deposit accounts, and over the last 2.5, 3 years, the growth has been substantial. I think accounts are now probably touching about 50 million out of a total of 200 million plus accounts. I think that number is, very encouraging. And that's happened also because of some of the interventions that the regulator has made in terms of the ease of account opening that has been provided in Asan account, Asan wallets, all these new avenues, simpler, better, and at least it's great to get you started. The composition of women in the overall workforce, and a lot of initiatives have been taken. But I think one of the fundamental things has been that this element of gender sensitivity has to be there in an organization to be able to move forward. Because that defines a lot of things, how you hire, how you grow women in an organization, career paths, what kind of training, development, facilities, environment, culture. Talking of the branch model of the future, I think it's got to revolve around a lot of focus on self-service. As I said earlier, self-service gives a lot of independence, to the customer. So we're already seeing more and more transactions being pushed to self-service within the branch. So you'll definitely see those digital lobbies expanding. The sizes are going to increase with more machines, tablets, platforms coming in, and transactions which today seem impossible without assistance. I think maybe in a few years, customers hopefully will be doing those transactions on their own. In terms of the interactions, the sales interactions, I think those are going to be more meaningful as we go forward. And the look and feel of those areas, the sales interaction areas, can also change. We used to have the universal teller, which has been there for many, many years, and now the term that is being used is a universal banker. So, and that is about, the teller leaving, the counter area, which is a sacred area, restricted area, and coming in front and doing other chores like selling, floor time, other things that they can help out while the transactions are being done on the machines. So I think all those things will happen, but it's important that we experiment. And of course, the branch network, I think, will keep on increasing. I think in a country like Pakistan, there's opportunity opening up everywhere.